Good evening, everybody, and welcome to another week of Mindset Mondays live. I'm Jan Carmanico Reeves, your host, and as you know, I'm on a mission to make real estate investing fun, easy, and profitable. So tonight, and as every week, we have wonderful guests. Tonight, we're honored to have with us Monika Jazek of RPI, co-founder with along with her husband of RPI Education. So welcome, thank you for joining me tonight. We connected on TikTok, ironically, and thanks for reaching out. So welcome. Just if you'll expand a little bit about yourself and RPI Education.
And thank you so much for having me, Jan. I'm so glad we met on TikTok. Finally, it became good for something. I'm ashamed to say I was doing a lot less interesting things on there than listening to wonderful real estate investing channels like your own. But yeah, I'm Monika Jazek. I am a full-time real estate investor. We've been investing for over 15 years, and I'm also a real estate investment specialist and wealth builder and co-founder of RPI Education, where we provide consulting services for everyday people and show them how to invest in real estate and alternative investments.
Wow, that's great. Great introduction. Here, I'm just tagging you in it here. Give me a sec. So, tell me a little bit about what can you tell people about partnerships? Obviously, you're doing a lot of them, and maybe give us an example of structure of something that you've been doing lately.
Absolutely. So I would say that the partnerships and one thing that a lot of investors focus on and that we help investors do either on their own as active or investment partners, sorry, active or passive partners are joint venture partnerships. And I think it's a great way that one investors can utilize to expand their portfolios after they have created a proven system in their real estate business and you've done, your specific model one, two, three, four, 5 times, it's a naturally
Whoops, sorry. Sorry, I just did something there. Yeah,
you actually graduate from creating real estate for your own wealth building purposes to really running your real estate business. And because there's only a certain amount of properties that people really need to build wealth. And after you have probably three portfolio properties in your portfolio, you are running your real estate investment business. And you may as well learn how to do it with others because it's a way that you could help people get these really great returns that they cannot do otherwise because you have this great skill set that you're able to help them while also grow your own portfolio at the same time.
absolutely. And I think after, especially if it's single family homes, but after a few, you run out of qualifying power, right? And but that's what I love about partnerships is you can help other people build wealth, which is really wonderful. And passively, so you can leverage your knowledge and your expertise to be able to help other people, which is wonderful.
Absolutely.
Yeah.
Absolutely.
I love how did you say it about after
Three properties?
yeah, that after you do so many, then yeah, now you're setting yourself up as an expert, right? To be able to help other people to
Absolutely.
yeah. Yeah. So yeah, I guess tell me about projects that you're working on lately.
Well, currently we're actually sustaining our portfolio right now, you can see that the market is quite in an interesting state, and we're focusing actually a lot on acquisitions right now. We have to be very, very careful in our applications. So our main focus of what we're doing right now is sustaining our original portfolio as well as doing the BRRRR model on buying single family homes and turning them into 2 to 4 units, primarily fourplex units in Toronto.
Mhm.
which really is been our main focus. And we've been helping a lot of other people add these properties to their portfolio. So our team has been finding properties all the time across Ontario, across Western Canada, such as BC and Alberta. And it's just such a buyer's market right now. So we're really telling people, now is the time to buy. You can buy for hundreds of thousands of dollars below fair market value and really add value using this conversion model right now. Just changing from a single family to 2 to 4 units. Usually it's 3 to 4 units that we fluctuate between. And it really also helps solve the housing crisis as well, as you're providing brand new places for people to live. You're attracting a really great tenant avatar, which is amazing. And you're also really tightening your real estate portfolio. Rather than having like 100 homes scattered all over the place, we focus on high growth areas, high quality investments that even if you just had 4 units in Toronto or 4 doors in Toronto, that's going to put you light years having 40 doors in Saskatoon or something. So,
Yeah, I love that. That's so very true. So, how are you bringing partners into these kind of deals? How are you?
so what we do with we have a rather finished portfolio in our regards. So we're very picky when we work with joint venture partners. We primarily teach people how to do it themselves. With our team of experts that eliminates all the guesswork. But from time to time, when we do our development projects, we will bring in partners to do these. Usually, our systems and our teams are so turnkey, they don't even need us to do these single family to fourplex, these multi conversions, because we find the properties for you. They're off market properties, they're undervalued, they're in high growth areas. We show you how to make money when you buy by buying them below fair market value. The construction company is there ready. You know how much it's going to cost. The mortgage is all lined up for you to do the construction financing. You don't need us for these smaller projects. Like save your pick, because I charge 50% as a joint venture partner. And so if we're going to do it, and some people still bring us along because they're just that nervous or that comfortable, but we usually try to say, you could do this without us. But, because normally if they're going to refinance this and take this, say for $800,000, buy this out a few $100,000 in and refinance it, say 1.6, 1.7, our students are pulling out like $250,000 of these properties. They're able to pay themselves back, and then you're all pretty much at infinite return. That's where you want to be. Otherwise, you're gonna have to give me like 125,000 and you don't even really need me to begin with. But that also shows we do train other people to do that for others who really do not want anything to do with it on their own, so they could build their real estate business. So we always do the way we train people to do these partnerships really is you as the expert come in and your duties are to do the acquisitions, to find the deals, to create the investment model, and to educate your partner on what the model is. So they know how much money they're going to need. What is their return on investment going to be? How long is their money going to be tied up for? And how are they getting their money basically pulled out? And what is the duration of this hold? So it's very, very complicated. And we teach people how to do these joint ventures and joint venture partnerships in our joint venture course. But we usually start with people doing it on their own. And after they've done it on their own, one, two, 3 times, I'm like, listen, you're ready to really show off and showcase all your work and start showing others the kind of returns you're getting and help others and take them on as the partners and create your real estate business. And this is really how we've helped people leave their jobs. Now, most of our people at RPI Education, a lot of them are just so happy getting a couple of these turnkey investments and continuing their jobs and working and having this highlight their lives. But we do have some students who did have a bit of dissatisfaction with their career, or a lot of people in IT, they want to have that income replacement just in case. And so they want to keep expanding and they feel confident and comfortable to utilize the teams to even do it with other people, which I think is super exciting. And when we do our own joint venture projects, we do them the exact same way. We come through with our knowledge, our expertise, and the investors are expected to come in with the equity and with the buying power. And then we take 50%. I feel
Okay.
so evil whenever I say that, but and then I always tell my students, like, it's not evil. Like, it's great because these people are getting, an average first year return on investment of like 110 to 120%, followed up by a steady anywhere from 27 to 63% ROI, total ROI. And so real estate is such a powerful wealth building tool. There is so much to share of these profits, but you just have to know how to do it right. We're in a very, very tumultuous market. And when I say we're sustaining a lot of our portfolio now, you have to be really careful with these models and to make sure you can go through all of the different sort of,
Market.
silos that's required in the Burr model for sure.
Very good. Well, and you say 50% with cringing, but you're bringing a lot of value to the table, right? With your expertise, your knowledge, your um, what you're giving to them. Um, because as passive investors, they may not have any education, or they may in real estate investing, right? So, I mean, they wouldn't be able to do what they're doing without an expert.
Yeah. And especially, I think it's very important that when you're going to these partnerships too, a lot of these courses out there, they're like, oh, invest with OPM, just take other people's money and invest it, and you're the expert. Well, we have 15 years experience behind us, allowing us to take, this percentage. And even if you don't have 15 years experience, you have to have the proven track record. I mean, if you're going to go into a business and operate this as a business, because we made over $1 million of mistakes in our first few years as real estate investors. We wrote about it in our book, Real Estate Mistakes. And in real estate, and we took all these courses and all these sort of things, but we didn't have this community and this support. And that's what we offer at RPI Education is we'll give you the courses, but we also have live, real-time online support for you. Even if you're not a higher coaching level, you could still come on group coaching every other week and get your questions answered or ask on our forums. Otherwise, a lot of our people who want more hand holding, we really have that support to minimize your mistakes and maximize your returns. And so, where was our coach after we spent over $100,000 in courses and our property in the construction field was going up? We didn't have anyone to help us in real time. So I think because we help minimize that risk and really maximize the returns, as well as like familiarize them and give them that real number of what they will be getting, it really, really helps them get that security to move forward.
Absolutely. Yeah, there's a lot to be said for real time and yeah, for education, because it does investing in one course, or coaching, that it can save you a lot of money and it can make you a lot of money. So that really is something that of value that you are bringing to the table. Absolutely. So, you talked about you have a special right now with three courses, the JV course.
We have the JV course. We have our 7 module wealth immersion program. And we have our 6 course real estate investing one-on-one bundle, as well as a live boot camp on May 3rd, all for the cost of just $997. And that includes also a year's worth of support through group coaching access and members forum access. So you go through the courses and then you're not left all on your own applying the information. So we're super excited about that. We come up with these promos sometimes because we know people are really scared right now. And they're really scared about tariffs, they're scared about elections, they're scared about market drops, interest rates, and everything. But we always say at RPI Education, wealth building never stops. And we really want you to take control of your own economy. And if you're really to be an emotionally astute investor, you have to be able to step back and see the bigger picture. And the reality of it is there's not been a better time to buy real estate since 2008. And this is the time where I know we were chatting earlier, and I was saying, my desk is flooded with investment opportunities on a daily basis across Canada and the US. And these are really great deals. We don't deal with cheap properties and bad areas. And, we deal in A+ markets for properties that are hundreds of thousands of dollars below fair market value. And then you could even increase the potential value of the properties, even hundreds of thousands of dollars above that. So you really can participate in these advanced tactics like BRRRRs, and turn these single family into multi conversions at zero risk to yourself, but with a lot of cushion and a lot of room for margins and margins for error because it's a tough market. I mean, if appraisals come in low, you're not going to get the money you need to pull your money out. Or if you're trying to flip a property and no one's buying, you're going to get stuck with this property. So you really need to have a lot of exit strategies, a lot of contingencies in play. You really have to not only have a plan A, B, C. In this market, you need a D, E, F, G as well. So there's a lot of stuff that goes
Yeah,
into it.
yeah,
Maybe the entire alphabet.
yeah.
But soon as things pass, and they will, if you look back every 7 years, we've had a significant event like this. It's really, if we could survive COVID, we could survive anything. So as this is moving forward, we have to see the bigger picture because when are you going to start buying again? When everyone else is buying? And then we're going to see the prices just skyrocket and escalate. Right now, you could get in for hundreds of thousands of dollars below fair market value. What is your excuse going to be in 3 months, 6 months from now when they escalate? And it's not going to be a slow crawl up. It's going to be an overnight sort of thing. And all of a sudden, and if you're in high growth markets, prices can spike over $600,000, $700,000. And so it's a significant spike and it will happen. So why are people waiting for that to happen? That's not the time to buy real estate just because everyone's investing in real estate. The time to buy real estate is when everyone is not investing in real estate. And you should not do it haphazardly. But if you are doing it with the support of a community and you're doing it aided with an expert, that really helps minimize your risk. And if you're really, really scared, do it with a joint venture partner who could do it all for you. And or if you just really don't have the time to do any of it, because even though we will do it all for you, you still have to be involved in a certain extent. And that's why we say real estate investing is your business. It is another income stream, and you have to keep your eye on your investment. Nothing is totally passive unless you're in private equity or you just kind of write your check and you're off to the races. Even in joint venture partnerships in these types of partnerships, you are a registered mortgage holder. So even if you don't want to have anything to do with these joint ventures, you want to be totally passive, you still need to take our courses because you need to be able to vet your joint venture partners. So if you don't keep your eye on your money is going to run away pretty quickly. So, and it
Yeah.
also helps you really identify a good deal better than a bad deal because some people are better at marketing than they are at real estate investing. And that has really showed in the last few years. Like Warren Buffett says, we've seen who's swimming naked when the tide goes out. There's a lot of groups have collapsed, a lot of people have collapsed, and a lot of deals have just stagnated, gone into bankruptcy. A lot of people have gone under. So,
A lot, a lot.
mhm.
So people are nervous right now to invest passively, and they should be, like you said, just because somebody's a good marketer and they look all great on social media and they're rocking and rolling. It is up to the investor to do their due diligence on the property, on the person, on all kinds of things to make.
Absolutely.
Yeah,
Just
yeah.
because people are popular on social media, that means they're a good marketer or it's great to have that presence. I love coming on these podcasts. I love, speaking on stages, writing in books, doing articles, radio, but I like to do it for information purposes to really show people what's possible. And thank God for people like you who provide these platforms. We're just so grateful for that. So it's really people need to hear these messages of positivity because people need to have real estate in their portfolio. Every Canadian needs real estate in their portfolio. They do not need to be a full-time real estate investor like I am, but they need real estate in their portfolio if they want to make more money every month, if they want to be able to retire, and if they want to be able to help their kids out. And those are the three things we really help people with at RPI Education.
That's wonderful. Yeah, I agreed. People don't have to be full-time real estate investors, and everybody can benefit from investing in some form of real estate and really start to create that generational wealth, help their kids, pay for weddings, pay for post-secondary education, build up their dream retirement. There's all kinds of wonderful things that and it's time in the market, right? Like the your real estate isn't a get rich quick thing. It's slowly using building blocks. And I think part of maybe people doing their due diligence is looking at the investor and seeing their track record, seeing,
Absolutely.
right? Seeing what they've done, projects they've done, how they've gone, um, yeah, how long they've been doing it.
Absolutely.
Yeah.
And another interesting thing to note too is that you should pick your joint venture partners as much as they pick you. So this is for active partners. So that's another thing we cover in the course is how to attract joint venture partners, but not by talking them into it, by just how showing them the value that you have, but also who is a good partnership, who is a good person, to do business with, and who really can you help, and who should you possibly avoid or not work with. Because it really is a business transaction that you're working with people on. And in real estate, things go wrong all the time. So as a partner, you have to ask yourself, what am I going to be like? What is it like if something goes wrong or something's delayed or something's, so you never want to work like when we do partnerships, it's with a partner. Even when we did our developments in Florida, it was with individual joint venture partners. It wasn't through an LLC. It wasn't through anything like that. Because I don't want to deal with securities regulations. If I do that, I just send them to our private equity people, and they have their own projects, billion-dollar funds that people can invest in and get fantastic returns and be safer than they would in a lot of these projects. But with these projects for the investors, it's just so important to protect your investor as well as protect yourself and not pool random people together. I've seen people come and they have about 8 people together on a single family home, or they have one person on the mortgage. They have another person funding the renovations. Another one comes in with a down payment. And then there's the joint venture partner putting these people together. And this is on like a $600,000 or $700,000 house. So if you're not able to find partners, like just that would take one person max, to do these kinds of projects. When you get too many cooks in the kitchen, you're really, really complicating things. And so I take a less is more approach. And that has been the secret to my success, is really rather than doing, a bunch of so-so properties, you're better off having a handful of really, really strong properties and knowing the difference between property for self and then property with others,
Hmm.
which is a really big point of distinguishment. A lot of people will go and they'll build their portfolio only with joint venture partners. But you really also need to keep your eye on your own wealth building, your own projects, and your own real estate for self, because these people, you don't want to be with your joint venture partners forever and ever and ever. Eventually, you want to buy them out, or they're going to buy you out, or there is going to be some sort of exit. Who knows what's going to happen? A lot of people forget to really do it also. Take some of that JV money and, well, we say people should start with themselves first and then go towards the JV. But when you get going with partners too, with those profits that you're getting, you should really be putting that also towards your own investments and maybe even doing joint ventures, your own joint ventures as silent people with others.
Hmm.
You don't always have to be in the driver's seat, the active investor. There's only real estate should be used to enhance your life so you get the time, money, freedom in your life, and it's a lot of work. So you don't need to pick a multitude of projects. That doesn't make you a better investor. Knowing what your goals are and what your time is and what your freedom and that means to you is more important. So now you're creating your real estate portfolio as well as a real estate business that you're in control of. It does not control you.
Yeah, I love that. That's great. And you should diversify anyways, right? So have a mix of different projects on the go, different partnerships, different um yeah.
Yeah, our wealth immersion program shows you how to diversify in real estate, diversify in mortgages and private lending, private equity, and those types of investments as well, just self-directing registered funds, investing in insurance, all these different things, as well as tax tips, corporate structures, and estate planning. People forget those. So everything we do at RPI Education emulates the top 2% and what they do in regards to their investments. And they're the people that are going to be making more money in markets like these and times like these because they understand how money works. So financial literacy is really, really, really important as well.
Hugely, hugely important. Yeah. Yeah, that's a wonderful platform that you're offering to people. That's wonderful. Um, yeah. So, and I think it's important when you were talking about how you're picking your JV partners, yeah, not to mesh a whole bunch of people together. You really have to understand what their goals are, and the project has to align with their goals. And if you bring in a whole bunch of people together, they might have different goals, and different people might want out, or before the end of the project, or all those kinds.
Exactly.
So
It's
yeah.
really important to set the tone. You're the leader. And
Hmm.
so they want to, you're growing their money. That's
Hmm.
your business. They don't come in and tell you how to run your business. Okay, I'll partner with you, but I'm only putting this amount down. And you have to put this. No, thank you. Or okay, I'll partner with you, but I need to be out of this project in a year. No, thank you. Like, because then that ruins your model. And sometimes people are so excited and so desperate to do a joint venture partnership. They feel like this deal is so good and it's going to go away. And so then they start bending and twisting and turning to these partners who do not know what they're doing. And they start deviating from their model.
Yeah.
And who's driving the bus here?
Yeah.
You've just lost all control and you have an inexperienced person who is in the driver's seat now calling all the shots.
Yeah.
And in our joint venture agreements and deals, it's very, very clear that we call 100% of the shots. And obviously, we are very respectful to our joint venture partners. We're not here to steamroll people, not communicate with people, make people feel, belittled or something. We appreciate and love our partners, and we teach people how to appreciate and love your partners, but they are investing on you. When you invest in a business, you're investing in the business owner. And so they really have to trust you to steer that ship through different times. Now, they will make their decision whether they want to invest with you or not. And you should present them with the duration of the investment, but also the worst case scenario. So always best case, worst case, most likely. Don't try to oversell and overpromise. Always try to overdeliver. But in the realities of investing, there's two realities. One, things don't always, go according to plan. Who saw COVID-19 coming? Who saw these tariffs really coming? Like a lot of these things. But the second thing is you always should be recession proofing, your business and really kind of planning for these things to go. And in real estate investing, you do not lose money until you either refinance or you sell. Okay. And so let's pretend you're going to one of these burst strategies, something shifts temporarily and you're not able to do the refinance right now. You, as the lead investor, have to be able to navigate that ship and go, look, we're going to have to wait 6 months before we pull that money in. Because the interest rates are too high. We have, say, 6 adjustments coming up. We're going to be better off doing this. And your investor should have known that before. So you tell them, okay, we're going to do this BRRRR. You have to qualify for this. You have to carry this mortgage, hold whatever, put up this capital. And our goal is to refinance, say, 4 months after, 6 months later. But be prepared. It might be a year and a half, 2 years. What if we can't refinance at all at this time? And are you okay having $250,000 out? You will get it back, but is that okay that that's out? We're still cash flowing. We're still holding. So the way we look at it is if someone's like, no, I need my money out in 3 months or 6 months or whatever, you can't do business. It's not fair to them because you can't out leverage people.
Mm.
So the majority of people that we work with at RPI Education are professional people who've done very well for themselves, but they know they are not getting the results that they want doing things the traditional way. That's how we started. We were trying to grow our money traditionally with traditional savings and, doing all the wealthy Barbara Susie Orman things, and it wasn't working. We lost everything in 2008. Real estate will give you so much more control. You can utilize leverage and get these astronomical returns. But, we could give people that higher performance that the traditional products they're just not getting. And that's really what they want. So we can't work with desperate people that need their money out or else they're going to lose their house and we always look at people's overall financial situation as well. Because people are very, very pressed right now. That's why I'm very reluctant to do things right now because we own a lot of assets and things are very, very tight in this market right now. You got to be very, very careful and very, very selective of what you do. And sometimes the best thing to do is to let things settle before moving forward. Now, I'm talking about people like you and I who have a lot of assets and these sort of things. People who are starting out, and maybe they have a couple investment properties or whatever, they don't have any. Now is the perfect time to be getting forward. And people who have their real estate businesses, it's the perfect time to start, doing these acquisitions right now.
Absolutely. Yeah, and you mentioned that um, people have to understand that things don't always work out as you plan. Things never work out as you plan. That's why you have to, I think that's a better description. You always have to be creative and have all kinds of different strategies in your back pocket, right? Because
Absolutely.
things just twist and turn, every day. Six different things can happen of something that you're trying to do, and
Yeah.
that's and
Yeah, you
that's
always have to have that plan. Yeah.
yeah. And I think that's why joint venture partners have to trust your experience that you're going to consider all these different things, and with your experience will make the best decision for the project, and um, you have the ultimate say.
Yes, yes, you always have to have that ultimate say and just really don't put if you are an active joint venture partner and even no matter how bad you want the deal, it's your responsibility, your fiduciary responsibility to protect people and don't out leverage them. Don't put them in precarious situations where they can lose their house. They've taken this risk and it's such a compliment when someone gives you that trust to work with you. You really have to respect that trust and not breach that trust.
Yes, yes. And like we mentioned earlier, there was a lot of breach of trust recently. So people are very cautious, and rightfully so. And that goes back to they should be doing their due diligence before investing.
Absolutely. Yeah, there's a lot of people, like we talked about before, they're good marketers or they use a lot of NLP. They talk people into things or they say, I've done this and that. They show them the highlight reel version. Whereas in reality, you have to really kind of feel how a lot of people pride themselves in saying, we never made a mistake, we never lost any money. And that's one of my biggest accolades, I think, is that we made $1 million of mistakes our first 2 years as real estate investors, because it made us an excellent consultant. There's very few types of investments that we have not done. And we've done everything from commercial, multifamily, single family, land development, all sorts of things. And we're still doing these things, but not the way we were doing it before, which was just we did over 100 deals our first year as real estate investors and continued that pace for years 2 and 3. And it was insane. We made so much money, but at the same time, we lost, money. Unfortunately, it was our money. It wasn't joint venture money.
Hmm.
And you don't have to do that. It's just such an exciting field to be in. And it's such a pot like the possibility of being a full-time investor. A lot of people just love that and they fall in love with that notion and feel like they have to keep doing more and more and more and more. A lot of these people who are also raising capital and then they're doing acquisitions. And as soon as they receive a certain amount of capital, they have to deploy that money, or else they're going to, get in trouble with Securities Commission or these sort of things. And that's where a lot of people go wrong too. In real estate investing, we have to create deals. But most deals out there are not good deals. So we have the 110-1 rule. Every 100 deals we look at, there you go, tie up 10, and one will be a really that diamond in the rough, a good deal. So when you're looking at things in mass acquisition standpoints, unless you're cherry picking and selling things back to the government for way below, and we do have partners who have those relationships with people and with REITs and with these things. But if you don't have that and you have to deploy these funds, you're going to start settling. And you can never, ever settle in real estate. It is such a detailed, structured investment. Like the way that we help our people move forward is they know they have to buy for this amount. They have to be able to create it to the next amount, the renovated amount, and they cannot go a dollar past this specific amount in their renovation budget. It's like a perfect ballroom dance. This is not a dance hall party. This is a perfect choreographed dance where all the steps have to line. It's not just you just shaking your booty and going crazy and having a great time with what you feel like doing. And if you mess up these steps, you're not going to be able to complete your project. So it requires a lot of precision, a lot of precision, a lot of timing, and a lot of also experience and the ability to see the bigger picture. Like an example, one time as I was walking a duplex here where I live in Markham, and this duplex was just before COVID. I think it was like $1.7 million, which is pretty standard for Markham prices. And I went there but I knew I couldn't pay more than 1.24 for this property for our numbers to make sense. And I didn't really love it because it was seriously like an apartment. And my main duplex models do not compromise a single family structure. But we went and looked anyways, and I was super excited I looked. And this is why we walk properties so much, and we all have our teams taking people out to walk properties all the time, is because you have to be able to see and learn, and you don't know until you see the property. So as soon as I went in there, all of a sudden, I noticed that each one of the duplexes had a complete separate entrance to their own individual basement. And then I noticed the windows in the basement were above grade windows and that they both have bathrooms, full bathrooms, four-piece bathrooms in them already. So all of a sudden, my duplex has turned into a fourplex. I just have to install two kitchens for $500 each here. And now I would have a $2.6 million property. And so now my asking price I knew to go in at, because this was COVID times, people are overbidding, would be I could now go up to 1.8 million. So I can actually overbid because I know what we're going to be creating with this property. And so it's really just little things like that that just experience gets you, and you just know what your max number is on purchase, but you know what your end product is. And from that, you could dance and tweak it a little more to know what you need to buy it for, how much the renovations will be, and how you can continue to recycle a lot of that down payment money or construction money and get an even better return on your investment.
Absolutely. Yeah. Yeah, it's that's it, experience. If you walked in and saw those two bathrooms already in separate entrances, it's like cha-ching, right?
Totally
Oh my.
separated. They weren't even in the unit. It was just like it was looked like it was a purpose-built fourplex
Yeah.
already. So
Yeah. Crazy. Crazy. But and that's experience because a lot of people, the average non-investor wouldn't see that. They would think, why do they have a bathroom down here? Is that ever dumb?
yeah,
Yeah, we totally have a different eye for it. Absolutely. Yeah. So, yeah, so I guess do you want to share maybe your um website for RPI Education?
absolutely. It's www.rpieducation.com.
Hey, that's pretty
Yeah.
easy.
It's easy. I'm sure we could type it in the thing below or but yeah, no, it's super easy. And yeah, and you could Google my name, Monika Jazek, if you wanted to learn more. And we're all on Facebook. And as you can see, because we're on Facebook now, Instagram, LinkedIn, all the social
Stop.
media channels. TikTok, kind of, don't follow me there. Some strange girls there just doing strange lip syncing and just to bother my daughter.
That's fun. That's
But
fun.
it's so fun to watch.
Yeah, it is. It's so funny though. That's actually how we connected, right?
Yeah, now I can go and see us talking on your TikTok. It'll be
That's
great.
right. That's right.
Excellent. Excellent.
That's excellent. So, any words of advice you want to share with the listeners? Words of warning about joint venture partnerships? Um,
Yeah, well, I think really just work with someone who's doing what you want to do. Always have your investments fit with your life, not fight with your life, and always only invest what you're comfortable doing as well. And so, one thing when at RPI, primarily for a lot of our personal group coaching students, we offer a full assessment for them and help them create their wealth blueprint and show them capital that they have available that they probably didn't even consider capital available, how to access this capital, and show them also a lot of the times they're that much closer to some wealth goals. They're closer than they think. And sometimes they're farther away than they think of other wealth goals. So we really kind of help circle back to focus on what are we building money for in the first place. So we don't buy properties just for the sake of buying properties. And every property is bought for a specific purpose. And we really want these properties to give our investors and our people time, money, freedom in their life. Because we don't want you in the field more and doing like 20-hour days like we were doing when we started, because that's all we were doing with real estate investing. We want you at your kids' volleyball games and, or taking up a sport like playing tennis or golfing, spending time with your family, taking care of parents. And that really is what's important in life. That really is the time, money, freedom. If money is your end goal, then you're never going to achieve that internal happiness and success because numbers are infinite and it doesn't have an actual, you know, goal that would reach that make you suffice. And if you're doing it at the expense of everything else. So even if you guys have one property, you are a real estate investor. And a lot of people in these groups are going to go for it and say, oh, how many properties do you have? And how many properties do you have? And it's this race to 100 properties. And the people who are primarily doing that, they're very new and they're only looking at the cash on cash return. And cash on cash return on real estate investing for ROI, your return on investment, is never high. It's impossible for it to be high actually with these interest rates today. So unless you're investing in a real low area and buy very, very cheap homes and renting them out, but then you have to kind of use common sense there too. If these areas are so cheap, why are these people not buying these homes themselves? So people have to kind of just connect the dots and the commonsensical approach as well behind it and really start thinking, having 100 properties is like having 100 kids. I have 4 kids and believe me, you don't want 100. And I've had 100 properties before.
you don't want that either.
No, I don't like that at all. So it really is, there's different components of ROI, and we teach that in our real estate investing one-on-one bundle, how to really identify and maximize ROI and really hone in on these various components and blend them all together so they can give you a really great, and the sweat equity component with the construction that we do on these BRRRR properties, it really gives you the lift that you need to really help you use your funds, then be able to take a portion back, and then continue to actually have like a brand new building that you're able to help rent out to help solve the housing crisis. And then after that, the other components of ROI take over, such as natural appreciation. You're not going to get that if you're in low growth areas, mortgage pay down, and also your income from the tenants. We can command higher rents because we invest in these high growth areas. Lower growth areas is going to attract lower rents. A lot of the areas, I was saying a comment about this on TikTok. I think it was on TikTok actually, and someone wrote, "This wouldn't work in Washington, like Washington State." And I said, "Because you're in a flat market." And so it doesn't work, and you can get properties for super cheap there.
Yeah.
So a lot of these areas like Cleveland and Detroit and Washington, oh, don't talk, get me started with Timmins, because that's where we started. All these sort of areas. Now I know you're in Windsor. That was a really great area, and the Windsor market always had amazing fundamentals. And people would say that was a horrible market. We were buying properties in Windsor for $99,000
Yeah, no, you were.
and sold
Yeah.
everything in COVID, and we were selling in the $700,000
Yeah.
range. And so you had a phenomenal market, but we always saw what those fundamentals were, even though other people were saying it's a bad idea, it's this and that. We were buying right. We had those contingencies in place. We had the strong models. And then once again, I would have kept those properties forever. But like we were talking about before, when those numbers hit, I knew it would be another 10, 15 years for Windsor to ever see that again. And I'm glad that we did that. And that's another example of, experienced investor, just like in Toronto now. I know we're never going to see properties this below fair market value again. I
Mhm.
mean, now's the time. Like people are waiting. These are going to be hundreds of thousands of dollars more because we're buying for under $1 million. So,
Mhm. And you have to look in areas too for key indicators, right? Like um, expansion in industries coming in and all kinds of different growths that like Windsor's kind of plateaued now, but there's a lot of investment coming into Windsor. The Gordie Howe Bridge is about to open up. The extension of the 401, like all those things, the new mega hospital. So it's not now,
mhm.
but it's coming. It's coming.
Yeah. But there's a lot of areas that are now.
Hmm.
You can get into now.
Hmm.
Now. And it's not dependent. Like where we invest in Markham, it's one of the best places to live in Ontario. And the prices are expensive, but there are deals
Hmm.
in this market. I mean, we flipped a house a few years ago here in Markham. I couldn't believe it. We got the house for $850,000. Someone had a sign up posted on a tree trying to sell it themselves. It was crazy. And we, did our daily searches. We have the course, How to Find Great Deals, and found it in our search and just happened to go see it. Because, like I said, we're always walking properties. Not an agent didn't even tell us about it. And just got it under contract right there on the spot and made $120,000 in 12 weeks
Nice.
flipping that.
Yeah.
So it can be
Yeah.
that easy if you just know, but you just have to be in it. You don't have to go far. I always say the best place to invest really is your own backyard. That's why I love you investing in Windsor and growing your thing for Windsor because now all your partners be like, yeah, I'm in Windsor. I'm driving by your properties, your apartment buildings every day. I'm here for you. I'm not in Winnipeg or, Vancouver or something, and all your properties are in Windsor. Like, because like I said, you have a responsibility for your people. So
Mhm.
it's just so handy to be close to your properties and to do that as well. And it really gives you a lot more control. Like we were having a lot of freezing and flooding the last few weeks. And, we were just driving by our properties every day and just checking on it and checking it, watching, is water pooling? Oh, shouldn't property managers do that? People are going to tell you. Keep an eye on your investment, people.
Yeah.
You can have property managers, but at the end of the day,
You'll
it's
have to manage your property managers.
you do, and that's a problem too when you're far away. We had a huge problem with managing property managers
Yeah.
as well, and they don't always. Sometimes they put bad tenants in their property, or they don't have your best interest at heart. So, and you lose all control. And I know what it's like to invest 8, 9 hours away and lose every sense of control. So when we're doing our investments, say in Calgary, or we're doing our investments in Texas or in Arizona or in Florida, we have our partners there too that we're partnered. We're a group. So if you were to do a joint venture partner with us there, we are with them. And that's our 50% there. Like it's not like you have this and then three-way split. We're the group because I will not do business in any areas where I do not have teams and investment partners on the ground.
Yeah. Boots on the ground.
Mhm.
Yeah.
Yeah.
Very important. I agree. Yes. Okay, well that's I think that's a wrap. And again, thank you. Thank you for reaching out to me and coming on. For anybody who's interested in learning more about RPI education, or just you can reach out to Monica just on Facebook. Is
Yep.
yeah, yeah. Um, yeah, maybe what you can do is drop the link to um, your website in the Facebook chat.
Ooh, does this live on or is this just gone after the live ends? Or
No,
that
it
needs
will
to be
live on.
recorded?
Yes,
Oh,
yes.
cool.
Yeah, yeah. So people can reach out to you there. And again, thank you very much for joining. And to our guests, thank you for being here tonight. And the recording will live on to YouTube as well after, so you can look for it there. Investing with Jan is my YouTube channel for anybody. Make sure you subscribe so that you can always see the latest video that's uploaded weekly. Okay.
Amazing. Thanks so much, Jan. I appreciate you so much. Thank you so much for having me on.
Thank you very much for joining and sharing your expertise with all the listeners tonight. Have a
Okay.
great night, everybody, and we'll see you all next time on Millionaire Mondays, Millionaire Mindset Mondays.